Good afternoon, everyone. I'm Lee Puglisi, Vice President of Investor Relations at Sentient Brands Holdings. Thank you for joining us. We greatly value our shareholders. That's why we're committed to transparency, frequent updates, and open communication. We believe informed shareholders are one of the company's greatest strengths. Today, you'll hear from our CEO, George Furlan, and from Serge Knazev, Managing Director of American Industrial Group, our strategic investor and manufacturing partner. Before we begin, a quick reminder, today's discussion may include forward-looking statements which involve risks and uncertainties. Actually, results may differ, and we encourage you to review our SEC filings for more details. With that said, let's get started.
George, could you start by giving shareholders an overview of where Sentient Brands is today and the progress the company has made in building its portfolios this year?
Thanks, Lee. Sentient Brands is building a portfolio of consumer brands across food, beverage, first aid, pet care, and disaster preparedness. Although our first subsidiary started operations only in May of this year, today, our portfolio already includes manufacturing and distribution for Original New York Seltzer, Aqua Emergency, and our American Red cross-branded emergency water program. We added over 600,000 in tangible assets to our balance sheet just in the first quarter of operations. We are very encouraged by this successful start and look forward to rolling in new subsidiaries and businesses as part of our 24-month acquisition strategy. We're expanding into other consumer packaged goods as well, reaching both retail and institutional markets. Our focus is simple: build real businesses with sustainable revenue, supported by governance and transparency.
So Serge, as managing partner of AIG, can you explain your group's role in this partnership?
Of course, Lee. AIG's strength comes from three areas: manufacturing, distribution, and financing. We also bring deep experience in government contracting. These capabilities are essential for scaling SNBH's brands. Our team knows how to get products made, delivered, and financed responsibly. Pair that with SNBH's strategy, and you have a powerful combination. In short, SNBH brings the brands and the vision, while AIG provides the execution platform. Together, we can deliver growth much faster.
Serge, let's go a little deeper. What exactly are AIG's capabilities, and why is this partnership so effective?
AIG is built on practical expertise. We operate manufacturing at multiple plants around the world, we manage distribution networks, and we know how to finance growth. That's a day-to-day work for us, not theory.
Now let's talk about the two recent share exchange agreements. George, can you walk us through them?
Absolutely. The first was for AIG F&B, our manufacturing subsidiary. It has been operational since May. In just a few months, it added more than 600,000 intangible assets to SNBH's financials, including sales, receivables, cash, and inventory. That's immediate value on both the balance sheet and the P&L. Right? The second agreement was completed on July 5th that brought Aqua Emergency into SNBH. It's already operational, and details can be found in our 8K and 10Q filings. These two deals are the first steps in SNBH's 24-month acquisition strategy. And so far, the results are clear: stronger cash flow, a larger asset base, and a growing portfolio. That's exactly the outcome we aimed for.
Okay, George, investors also want to know about your acquisition criteria and long-term strategy. How do you choose deals?
Our approach is disciplined. Every acquisition we do has 4 key principles. First, each deal uses a 5-year earnout. That means sellers only get full value if they deliver growth over time. It avoids immediate dilution for SNBH shareholders. Second, We only acquire businesses that are already cash flow positive. We're not looking to buy turnarounds. We want strength that adds value from day one. Okay, third, we mitigate risk with a 12-month mutual unwinding clause. If expectations aren't met, either party can step back. That protects everyone involved. And finally, this model aligns incentives across the board, shareholders, management, and the acquired companies. It creates long-term value without unnecessary risk. You know,
Now, George, investors have also asked about uplisting. Can you address where that stands?
yes, uplisting remains a core strategic objective. It would broaden our shareholder base, improve visibility, and open access to institutional capital. To qualify, we must meet requirements for equity, market cap, governance, and share price. We're strengthening our balance sheet, growing revenues, and improving liquidity. While I can't give a fixed timeline, uplisting is central to our plan, subject to market conditions and regulations.
And on that point, George, could you also explain how a reverse split might play into the uplisting process?
Yes, we are already in the process of implementing corporate governance requirements. On the financial side, we are required to have 5 million in shareholder equity. If our asset base increase trend continues, we should be able to meet this requirement pretty easily. Minimal bid price and resulting capitalization is a more complex requirement. A reverse split is one way to meet the minimum bid price requirement. Let me give 3 examples. Right now, with approximately 120 million shares trading at 5 cents, we're far from the $4 threshold. The company capitalization should be way over 400 million to be able to uplist under these conditions. A 4-to-1 split would reduce shares to about 30 million, but at 20 cents per share, it's still well below the target. A 25-to-1 split would reduce shares to approximately 5 million. If the pre-split price rises to around 16 cents, that would translate to approximately $4 post-split, which gets us closer to compliance. In this case, capitalization can be in 20 to 100 million range, which, in our opinion, is a very realistic target within a reasonable time frame. So, while reverse splits are a tool, they must be paired with real operational progress. Our ability to continue attracting high-quality businesses for acquisitions is directly related to our cap table structure.
Now let's turn to capital raising. George, what can you share?
We are preparing a private placement memorandum for an initial capital raise of up to $5 million. Our goal is to strengthen the balance sheet, fund operations and growth, and ensure fairness for both existing and new shareholders. Once finalized, full details will be disclosed as required.
Now, Serge, from AIG's perspective, how do you view these steps, uplisting, reverse splits, capital raising, in terms of shareholder value?
They all linked. Uplisting is essential, and our support for SNBH depends on tangible progress towards that goal. We are watching closely governance, balance sheet improvements, and share structure realignment. These steps are needed before unlocking our most valuable brands and businesses for SNBH. But uplisting alone isn't enough. It has to come with contracts, revenue, and portfolio expansion. Taken together, that creates long-term credibility with institutional investors and strategic business partners like ourselves.
George, before we wrap up, what final message would you like to share with shareholders?
Okay, my message is simple. We are building real businesses with lasting value. Our focus is execution, governance, and growth. And uplisting is an essential part of that bigger picture. We thank our shareholders for their trust and support. We are very encouraged and excited about our initial results.
Thank you, George, and thank you, Serge, for your insights today. To our investors, thank you for joining us. A recording and a transcript of this conversation will be posted on our corporate website in the Investor Relations section. As a reminder, today's discussion contained forward-looking statements that are subject to risks and uncertainties. Actual results may differ materially, and we encourage you to review our SEC filings for more details. Finally, we invite you to join our investor call next week featuring Brandon Jones, President of the Aqua Emergency Division, who will provide a deep dive into our emergency water business, its market opportunity, and growth plans. Please feel free to reach out to me should you have any follow-up questions. We appreciate your continued support of Sentient Brands Holdings. This concludes today's call.